Here's a very good reminder. Entry is no more than 10 pips from the high or low of the candle or at the 3-bar reversal point. Again, these are reminders for our trading strategy. Here we cover our trading tools. Remember, we have moving averages, the 32, 64, and 200, and what they're for. The moving averages define real-time support and resistance, trend, and momentum. I use them to confirm, not initiate positions. Remember, we're not looking for the moving averages to get in. We're using a break of support and resistance and momentum to do that. We also cover the Fibonacci levels. Fibonacci lines are useful for locating potential resistance or support levels and for establishing targets and the trend. Remember, we talked about how if you have a Fibonacci retracement on, here are the different levels on the Fibonacci. If our first level here at 38.2, if the market just can't break that, remember that equals a potential trend. Okay, that's why we use the Fibonacci. We also took a look at news. We've got to remember fundamental information overrides the technical. I'll check dailyfx.com each week for the schedule so I know when to expect massive volatility. Okay, we also have rules for entry. These are 3 key rules. I didn't reprint all the 12 here, but these are the 3 key rules for entry. Never chase a trade. Always have a written trade plan. Always trade the obvious patterns. That is paramount. Getting out, we have our exits. Take profits early and often. This means taking a minimum of 50%. If you're trading 4 lots or less, it's going to be tough for you to use this rule here. So if you're trading 4 lots or less, remember we talked about if you're trading 4 mini lots, you should think about trading 40 micros. That way you can take the 70 to 80% off. And 70 to 80% if I'm trading more than 4 lots when the market has moved 23 pips. Remember, the reason why we use 23 pips is because when the market trades 23, that means we're going to be able to get out at 20. Okay, remember that bid-ask spread. The remaining position is there to take advantage of big moves. I'll exit this position at a candle reversal, 3-bar reversal, or moving average curl. Now, here's where we get into some of our planning for our day. Before the trading day ever starts, so this is 1 hour prior to the open, and this is something that's very critical. Trading is a profession that requires preparation, and you've got to remember that if you're going to trade, it's going to be very difficult for you just to wake up in the morning and sit right down at your desk and start trading. You're better off waking up a little bit early, taking your time, waking up. If you like to read the Bible, read the Bible. If you like to just relax and read the paper, read the paper. But try and get up prior to the open. That also means you're going to have to not stay up so late. Okay, so we want to find the obvious patterns. So this is where we're going to investigate the market, support and resistance levels. Now this is all stuff we should have been doing the day before, but this is going to help us to remember and remind ourselves what's going on. You want to define the Fibonacci levels. You want to do 10 minutes of what I call mental movies. Now, this is something that again, it's not metaphysical. There's nothing super spiritual about this. This is simply something that's been proven in sports for decades. In fact, one study of downhill slalom skiers found when they took 3 groups of skiers, they had one group which just did visualization. We had another group which just practiced. So this group only visualized, this group only practiced, and then there was a third group that did both. The third group that did both performed 60% better than the first 2. Visualization is a key component to any type of performance. Now here's something that may shock you. The group that just visualized did 35% better than the group that only practiced. Now you have to remember, these people here